you either die a hero or you live long enough to see yourself becoming the villain. Your first stocks, I highly recommend it to be a dividend stock because it means that you will get paid the dividend like in 3 months, 6 months, or longest by 1 year after you first invested, even though the stock price has dropped. The worst traumatic experience for a new investor is when a stock price that you invested dipped right after you put your own money in, then holding onto that stocks for 365 days in red while you are not getting a single cent back from your investment. But if you suffer say a 10% paper loss in a stock, at the same time you're getting like an 8% dividend for the full year, then it's not too bad. Psychologically, you can think of it like you are just losing a 2% paper loss, like just losing 2 ringgit out from your wallet or pocket of 100 ringgit. Here are 30 stocks with dividend yield more than 6% in Bursa Malaysia, KLSE. Around 6% Maybank, RHB Bank, Kenanga Investment Bank, Affin Investment Bank, Kosan Rubber, Hexa Capital, Wilong Glen, Country View, Favel, FIMA Corp. Around 7% Genting, Innoprice Plantations, UOA Development, Teleworks, Petronas Gas, Amanah Raya REIT, KIP REIT. Around 8% Apollo Food, TNB, OSK Holdings, J Corp, Central REIT, Atrium REIT. And I saved the best for the last, more than 10% dividend yield, Top Glove, Zulian, Awine, Nime Holdings, Hanley Corp, Emphas REIT. I'm sure you have found this list useful. It does not cost you to give me a gentle tap on that like button just below. Your like is worth 100 ringgit to me. Now, the thing is, you don't have to give me 100 ringgit out of your pocket, just a gentle tap on the like button. Thank you very much. Know that you can always recalculate a more accurate dividend yield by doing this. Look for the DPS or dividend per share figure in the company annual report, then divide by the share price you are seeing today, and voila, you get your dividend yield percentage updated. Caution, caution before you invest. Related video you must watch: why dividend stocks or high dividend stocks could be bad, which I call as a high dividend stocks trap. Also, previously did a video on explaining what each of these company does as its core business. Check out that video, don't miss it, on the upper right hand corner after this video. The only problem with stocks which distribute high dividends, well, usually they are not considered your high growth stocks. In other words, mature companies in mature industries. So the stock price will be like a steady bumpy, may not like skyrocket multiple double digit within a short time, like within a year. Of course, exceptions apply. Why? Tell you why in a while. But I want to classify all these 30 stocks into its respective sectors. Example, Apollo Food, J Corp, Zulian is consumer staples, Genting is in consumer discretionary, Hexa, FIMA Corp, Favel is in industrial, financials include Maybank, RHB Kenanga, and Affin Investment Bank, whereas Innoprice Plantations are in plantation. Property sector, UOA Development, OSK Holdings, Awine, Nime Holdings, Country View. You have your Teleworks, Petronas Gas, TNB in utility sectors, Wilong Glen is in tech IT, Top Glove, Kosan Rubber is in healthcare, and REITs, well, it's very obvious, right? I always try to rationalize which business sector has more higher growth potential. How about you? Which sectors you think have the highest growth potential from here on? Let's kickstart this discussion by leaving your comments below. At the same time, I also thought about which stocks has been oversold with a generally low PE ratio, which a lot of investors consider as undervalued or below their intrinsic value. Oh, by the way, watch this video. It's popping up in the upper right, how to shortlist undervalued stocks in Bursa Malaysia. Don't ever miss that after this. A stock is perfect when it could fulfill the 3 criteria: a low PE ratio, or in any other way it's considered as undervalued, a high dividend yield, also in a high growth industry. Before you answer in the comment section below, watch this video that I did previously on which industry contains the best stocks sector that has beaten inflation since 1970. It's an in-depth research you do not want to miss. Watch it in the upper right hand corner. Click on here after you are done with this video. Why high dividend stock usually has slower stocks price growth than zero or even low dividend stocks? Is it something like cheap thing no good, good thing no cheap? Actually, no. Imagine you and your 3 family members run a durian orchard or durian farm business exporting to China, and for the year you make a 1 million profit. Now you decide, right, on the one end of the spectrum, you want to reinvest this profit back into the business to buy, say, more durian farms to generate next year 2 million of profit. Or on the other end of the spectrum, you choose to distribute all the dividends, all the 1 million profit out to all family members today, including yourself, so everyone can buy their dream BMW car this year. Next year punya house, next year baru ting lah. This isn't unlike what you read on instant gratification, but in a public listed company, this matter can get pretty complex. Now you see, the CEO, CFO, COO or CTO or all those C-suite executive or the top management, their yearly KPI might be tied to the share price. So this motivates them to make short-term decisions that would drive up the share price within that year. Short-term decisions like propose to the board of directors to declare most of or all of those profits into dividends so that the shareholders are very happy. The public of retail investor will cheer on this dividend distribution decision because hey, everybody loves money. In their hand today is way better than having to wait for the money in their hand 2-3 years from now. Even institutional investors like EPF will be relieved because the reasons they invest in these high dividend stocks is so that they can pay you decent dividends of say 5.5 to 6% instead of the lower end like 4 or 4 point something percent. Now such events usually carry positive sentiment which may in turn further drive up the stock price. Now the CEO, CFO, COO and the top management achieve their target by getting a big fat bonus and maybe stock awards. Everybody is happy, right? Not necessarily. Why they are doing this, their competitor, right? Maybe a new contender, a new challenger might be on the way to disrupt their core business, eating up their market share left and right rapidly or even slowly but surely. But this company that do not reinvest back into the business, they might still live in their own bubble, like being complacent. Just look at what happened to say Intel, right? I mean, they've been complacent in the mobile chip business. That's why, you know, ARM actually took over, and when they realize it, it's already too late. This complacent company, what they're thinking, they say, well, we are just going to sit on that, enjoy the moment. But what will going to happen in the next 1, 3, 5 years down the road is that the profit will now start to decline, and then they would have less dividend to actually distribute out. When this happens, even if you put the best CEO in the world to turn this around, also he or she can't do anything much. Now, investors then suddenly be awoken to this and it will start to punish the stocks by dumping the stock, right? Selling it, and the stock price will come crashing down. Cases like this, no amount of value investing strategy can save you. And to actually add oil to the fire, the fundamental analysis that you have done earlier, well, that doesn't really matter anymore. You can throw that out the window. Wow, who's selling? Wow, the fund manager are selling. Ayo, the big guys are selling. Wow, EPF also selling. Wow, Khazanah also selling. I also sell. Wow, run away. Wow, panic. Wow, run away. You might not want to believe me, but my friend, investing isn't like a straight line. There's a lot of ifs and buts. The only way to ensure that you profit more than you lose is by being very nimble and not only look at the accounting statements only, you also have to look at the economy, the business sectors, astaga. After all, the only constant is change. Look, don't let this formal feeling get to you. As an independent licensed advisor for years, the thing is, I can confirm there's no shortage of opportunities to make money when you look at the world from an abundance mindset. Today, tomorrow, yesterday, in the future, doesn't matter. There's always opportunities, right? Now, the thing is, coming from a position where I literally lost like 50% of my stocks holdings back in 2008, hey, what you lost is just money. You still got your health, your family, your pets, video games, whatever. Life is still good. Not to mention, you either die a hero or you live long enough to see yourself becoming the villain. If this has given you an aha moment, how about giving this video a like if you have not already? Thank you very much. Arigato. So you want to know how we help our investor and clients solve these problems? Comments below. Or if you want a one-on-one help, second opinion, there's a link in the description below that you can fill in so that you could reach out and explore if there's a way we could add value to you by a tailor-made advisory or even a second opinion on how you could do better in your investment. And when you love my video so much and sincerely want to support me by joining CF Liu Channel Insider membership from as low as 10 ringgit per month. Subscribe for part 2 coming up next. For the time being, YouTube thinks these are the related videos that will keep you occupied. Till then,